My name is Mayank, and first of all, just a massive round of applause, please, for all of the DECODE folks that have actually put this amazing room together. It's exceptionally well organized, all the way from like escorting people from the garage if they can't find you, to just getting this amazing group of people together, to all of the events that are coming up as well. Just really well done. The only feedback that I have is if you could pick me before Esther next time, that would be great, so we don't have to follow that act. But all right, well, I'm really excited to welcome Rama and Baris here. I am just the facilitator, so if you guys have questions, please interrupt, ask those questions. We want to make sure we get the most of these two brains here, not this one. So with that, maybe what we'll do is just kick off with quick intros. Mayank currently work at Gartner, where my company Pulse was acquired about a year and change ago, and I have the pleasure of calling these two gentlemen my friends. So let me start with Rama, since he's closer. Rama is currently a partner at Norwest Ventures, one of the more preeminent sort of venture capital firms in the Valley, and Baris Aksoy is also a partner at AB8, also in the Valley, and they got started in the last 3 years, 4 years? 4 years. So I'll let them do a quick intro and then jump in from there. But as I mentioned, please keep this interactive. As much as I love my own voice, would love to hear from you guys as well. So Rama, do you want to tell us a little bit about yourself?
Sure, it's great to be here. Hey everyone, my name is Rama. I'm a partner at Norwest. If you don't know what that means, we're a venture capital firm. We have a $3 billion fund that we invest in startup companies, everything from enterprise companies to consumer companies, healthcare companies. We operated here in Palo Alto and San Francisco, as well as in India and Israel, all out of the same fund. My background is I'm an engineer, electrical engineering undergrad. I worked at Cisco for a number of years and then joined Norwest 13 years ago. Norwest is one of the oldest venture capital firms in the country. And I can tell you more about our history, but that's me. I've got 2 little kids, live in Burlingame, and originally from New Jersey. Anybody from Jersey in here? All right, I got one.
Hi, this is Baris. I work at another venture fund. We started 4 years ago. It's a $360 million fund, investing all the way from inception, single founder just with an idea, all the way to leading A's. We invest across enterprise, healthcare, and insurtech areas. And I will talk a little bit about that. In my background, like Rama, I'm a EE undergrad, started coding for doing chips, designing chips, worked at various startups, and then went up to higher in the stack, become a product manager, and then eventually I decided to switch to the venture side. Because of his fund was an investor in my early company that I was working at, kind of seeing how venture capital, how powerful and how influential that is in terms of building great companies. So it was kind of like, for me at least, when I learned what it is, it was love at first sight. So I decided to move on that path, and I'm happy to tell you more through the panel. Great,
awesome. So just to kick us off, name one of your favorite portfolio companies and why. And it's hard. It's kind of like picking your favorite child as a parent, but we all have it. So Rama, what's your favorite?
There are so many, but I am a security geek, so I'm really using my engineering training to kind of pick my investment areas. So I invest heavily in security, open source companies, and a lot of developer tools. There's one company called Vesa that I backed a couple years ago that's trying to solve this problem of security in Snowflake, or security in the cloud. We're putting all this data in the cloud, we being the industry, we being people, as putting our files in the cloud, but there's no security up there, or there's very little security up there. So Vesa, V-E-Z-A, is my favorite child today.
Nice. Baris?
I was going to go with the security, now I'm going to change it. I love security too, especially with the geopolitical situation changing this fast. There are a lot of interesting stuff going on. But I'm going to talk about Newborn. So I'm just investing in a company right now, going after the foundational models. I don't know if you guys heard, but large language models, GPT-3. There's a huge wave of interesting companies that are coming up. We're investing in a single founder, single person company. just starting to build an infrastructure to power that way. Basically, if you want to start an AI company with using OpenAI or any of the large language models, you can use their platform to quickly build your own application. It's kind of like a SageMaker for the foundational large language model world.
Cool. All right, so how many, the show of hands, how many people here are entrepreneurs or want to start their own company at some point? Okay. Okay, fairly meaningful. And how many people here want to be in venture capital at some point as an investor? All right, cool. Nice.
You can't convince them not to do it.
These are all future interns here that we can recruit from. So,
Future bosses.
future bosses.
We'll work for you one day.
All right, so we're going to split the conversation really between both and try and straddle entrepreneurship and venture capital. As I said, please interrupt for your own questions, and we'll make sure we have time for the roundtable after as well. All right, so let's talk a little bit about the weather outside. We have plenty of layoffs going on. We have some stocks that are doing less well in the tech sector, especially recently. For those who are about to go and start their own companies, how would you think about starting a company in this weather from all the experience you guys have had? And what advice would you give entrepreneurs about to embark on their journey?
I mean, when you invested from an entrepreneur's perspective, when you're starting a company, you're getting into a 10-year journey, minimum. Like, what is the average time to an exit? Almost, 12 years, 13 years now? Even though the last couple of years gave the impression that things are like lightning speed, it wasn't. Like, it takes forever. It's very painful, and there are going to be multiple cycles through it. So when we are investing in a very early phase, it really doesn't matter. Right? We are writing checks right now, investing in companies. Our slight preference, what happened with this climate, is going to be, and what it is now, is early stage. Like, we do more early stage, so where we can capitalize companies at the inception or seed stage for the next 2 to mostly 2 years to build a product. And through that downturn, through that microclimate, hopefully they will be able to build the product, and when the market is open up, they're going to be out there selling. Selling now is obviously going to be harder. Doesn't mean that there are not opportunities, but I think for infrastructure companies or enterprise companies that we invest in, which require a lot of development effort, it's usually 6 months to 1 year kind of a development effort minimum. It's a perfect time to start something. Go start something, build it through it, raise the money, build it through it. By the time hopefully the market is open up, you're going to be ready in the market with a great product. So that's what we've been doubling down on. So that's the slight change that we've been seeing.
Yeah, I would add to that. I think it's the best time to start a company in 20 years. I'll give you 2 reasons why. The old model of venture capital, I didn't even know what venture capital was when I was an undergrad, even when I was working at Cisco as an engineer, eventually a product manager in Silicon Valley. I didn't know what it was. And I saw Cisco buying all these companies, and I was like, what? Where are they? Here we go with the lights. Mood lighting. And I said, wow, this could be awesome. I could actually be an engineer and an investor at the same time, 2 things I really love. And to get into venture capital is a whole other story, which we'll tackle in a minute. But it used to be this driving up and down Sand Hill Road, just like the Silicon Valley, the show, where you were kissing the ring of very old, traditionally old white men that controlled these organizations. We've gone from that to San Francisco being sort of the hub in South Park. So we kind of moved all into the same neighborhood in San Francisco, which was the first phase of change. Then COVID hit, and everything went to Zoom. And then AngelList came along, and then all these companies were distributed, and black GPs started coming up, women GPs started coming up, starting firms. This whole access to capital has never been greater than it. We still have a long ways to go, and I hope that chart that Rich put up earlier, that one day we'll have an HBCU up there and some more diversity on that list, even being a Penn grad myself. But my point is that the access to capital, there's so much capital flowing into Silicon Valley, more than there ever has been. So the question is, why now, right? And to me, if you're familiar with the innovator's dilemma, that's exactly what's happening in every big company right now. They're all cutting costs, tightening their belt. You see what happens in the stock market. Every time the stocks are getting pressure, everybody has to cut costs. So guess what? There's an opportunity for startups to actually innovate, and grab that opportunity. So I think it's the best time in a long while to actually start a company, and there's plenty of capital, and the capital's been democratized, is the best way to put it at this point.
Awesome. Any follow-up questions on that, folks? All right, well, next one, let's talk a little bit about, you touched on this, Rama, the future of venture capital. With COVID, obviously teams are massively distributed now. As you said, they're coming up everywhere. You guys see your pitches on Zoom now as opposed to the in-person Sand Hill Road tours. How do you guys think about Silicon Valley still being the hub? Is it still important to be here because of access to talent and exit opportunities and capital? Or is that changing more and more and more and more democratized so that folks who aren't from the Valley can go back to their homes and continue to be as successful?
I think I'll give you an example. When we at Norwest evaluate a deal, an investment, we have a scorecard. And we score the CEO, the team, the technology, competition, market. And the last thing we do is location. And it's sort of an old relic, and I don't even know what that means anymore, right? Some companies are totally distributed with no office. So I almost put a question mark sometimes in that instead of a score, because I think it doesn't matter anymore. I do think that in certain areas, whether it be cybersecurity, hardcore infrastructure technology, AI, the large language models that Baris was talking about, there are great hubs around Berkeley and Silicon Valley that talent, access to talent really does matter. But I think anybody can apply to YC. You went through YC, people all over the world can get into those programs. At the same time, I think what we saw last year was like a money cannon. Right, 2021 was crazy for venture capital. It was a record peak, venture capital amounts flowing into the system from hedge funds, from international, endowments, all kinds of places, folks that were never doing direct investing. So what happened was that, all of a sudden, all these international money flows were coming in, but not just Silicon Valley, right? These distributed teams. Auth0 is a great example, if anyone knows that company. Completely distributed, engineers all over the world. And we used to think that Silicon Valley companies wouldn't buy or acquire those types of companies, and they had a massive acquisition by Okta. So I think it's really changing.
We agreed to disagree before the panel, so I'm going to pick my war right now. I agree I agree with Rama, but in practice it's a little bit different, I think. So when I think the Bay Area has something very special, and it is very hard to replicate in a short period of time. I don't know what the latest distribution of the dollars, but the rule of thumb was 1/3 of the capital goes to the Bay Area in terms of venture capital. The other 1/3 goes to the rest of the United States. The other 1/3 goes to the rest of the world. That's what the distribution was. Maybe it's slightly changed, but I'm still, if you look at it, I would assume the lion's share of the venture capital is still in the Bay Area. That makes life easier. And because of that, you create different flavors or genres of investors in the Valley because there's so much capital. They are more risk prone. They are earlier investors than the East Coast or Europe or other places. So it creates more opportunities for people who are starting from scratch. So capital is still a huge differentiator for the Bay Area. And the second is the talent. On paper, it looks great to have a distributed team, and which I like it too. When you talk to any founder, suddenly you can hire 1,000, I'm making the numbers up, but maybe 10,000 engineers around here. You expand it to 1 million if you can hire anywhere. So that's fantastic. Making it work, obviously, it's not easy, but for certain set of skill set, it's not easy. Mayank is the one who built the company in a distributed manner. But the hiring talent in certain areas, go to market, like finding someone who built $0 to $10 million SaaS business on a PLG motion, product-led growth motion, it's hard to find that people everywhere around the US. Yes, Austin is fantastic, but I don't know if there are people like that in Austin. They happen to be living around here, and I don't see a lot of them moving out, right? If you need a certain type of engineer who's skilled big AI systems to, billion parameter learning, training, I don't know if you can find them other places than like Seattle and Bay Area because of these trillion-dollar companies, if they are still $1 trillion. So there are elements of distributed remote work which is very helpful, which every company I work with are taking advantage of. But I think it's not like really binary. It's kind of like a spectrum. And companies are moving that scale in engineering. Yeah, go full throttle remote work, fantastic. But certain areas you seem to be, I guess, pulled towards the Bay Area. And that's my observation so far.
Okay, fair enough. So equal split. Of course, yeah, please.
So less about location, but more about the very early nascent phase of the pre-problem solution fit, pre-problem product market fit, when things are so dynamic that they are changing constantly. And there's a core team of people that need to be in continuous communication. So I believe in distribution and workforce over time. But I want to ask your opinion, does it work at the earliest stages, the most nascent stages, the most uncertain stages, when the core team is distributed? Because I find that really hard to imagine is not without massive challenges.
I have one portfolio company CEO, Jody, who's the CEO of Productive. He wants everybody in the office, and that's his style, and it's working for him. We have others that don't have an office, and a friend of mine at Airbnb told me that weekday bookings are spiking. And I was like, what's going on with that? Offsites. So instead of having an office, these companies are using Airbnb locations to have offsites where they'll get together 2 days a month and everybody in the same room. So we're adapting and sort of doing different things to kind of get together. I think we're all it's human nature that we have to be in the same room. But I don't know that we have to sit next to each other on Zooms or sit next to each other for 8 hours a day writing code anymore.
Yeah, it's less about writing code, more about the decision and what code you write.
I mean, my take on that, especially early phase. I mean, I'd love to hear what Mayank thinks, because it's, to steal from Steve Jobs' thoughts about this, it's very fragile. Things are very fragile at that moment. Your commitment is fragile, the product is fragile, the market opportunity is fragile. So it needs constant marination, right? So there are extremes such as people live together to build this logo. I forgot what they were called, but like there are accelerators like that. You go live together. Silicon Valley, that's true. There are Piper-like situations. I forgot the guy's name, but Eric Buckman. So there's that. But at the very, very early on, I think being present or constant communication is very important, because you're so early. If you miscommunicate, you misalign, you kind of diverge in a very different area. At a certain point, I think remote is definitely a great tool in the tool set. I don't know, what do you think?
I think building a company, especially with a team, early stage, is like having a relationship. If you meet someone and it's a long distance relationship, kicking it off and getting to the point of maturity with someone who's longer distance versus in person just takes longer, I think. You don't have those shared moments, you don't have the productivity, to your point, on like visualizing on a whiteboard together or grabbing that random glass of wine or whatever the case is. I think that adds up over time. And so I would say the state of maturity at the end of a year of an early stage company, being in person versus remote, could be materially different unless the remote company is really putting an inordinate amount of time, effort, energy in that. And if you are doing that, you're not putting it somewhere else. So it starts to add up. Yeah.
I have a follow-up to what panelists were talking about. It also depends on the type of the startup you're doing. For example, when you have a startup that's, if you're from a foreign country and you're doing something local, I mean, it doesn't necessarily need to be here. I mean, because you might not need funds from here or you don't need developers. But if you're doing something global, something that you know that can affect like millions of lives over there, I mean, I'm actually in the business of helping founders from undeveloped countries immigrate to the United States and helping them grow from here. You need to be here. Like, I mean, no other. I mean, I've tried Europe, still far away. I mean, like many other big countries. I mean, even England, if you look at it, it's number 2 in a way, but it's still far away, or Singapore, or whatever. So Bay Area is still like I'm number 1 for that. And I have a question, if you don't mind. şüphesiz ayrıca konuşuruz inşallah. My question to you guys would be how to get in touch with you guys. I mean, like, is adding you guys on LinkedIn enough, or is there any specific way of getting in touch with you guys to work with you?
You have to give me a Venmo advance.
No, hit us up. I'm on Twitter, VC Rama.
Okay.
Slide into my DMs. Seriously, I want to reflect on something you said though, because having worked in New York, I don't think all U.S. cities are equal to the Bay Area in one unique way. And I'll piggyback off what Esther was saying. You can fail here, and it's not true in New York and the East Coast especially. If you mess up or if your company doesn't succeed, there's sort of a tarnish on your record. And here, I know Silicon Valley is built on sort of a number of failures, right, and learning from those mistakes. So I hear you. There's something special about where we're sitting.
Yeah, and just to build on that, I mean, the talent that comes out of this area in particular, Berkeley very much part of that, is just unparalleled because they come in with the mindset that anything is possible, and they come in with the mindset to solve the world's largest problems, knowing that they can do it, as opposed to having been convinced over a 2 to 3 year journey that of course you can do it, right? They've seen it, they've seen their friends do it, they've seen neighbors do it, they've seen, or at least know people, they've had exits, and that mindset in itself just takes so long to cultivate that that's sort of an unfair advantage in this area in particular.
I mean, I have one thesis on that. I'm picking on Europe, I guess, London. I mean, if you look at a lot of venture capitalists or investors around this area, either they are, Rama and I were in startups. Mayank is going to be an investor at certain, I'm sure he's investing. So everyone kind of grew from this area almost. And then when you go to Europe, there are a lot of banker types. So it becomes, the banker type doesn't mean that they are better in diligence, but there's an element of transactional relationship. So this is a trade I make, and do I make money on this? I didn't, so this entrepreneur sucks. For us, a lot of the venture capitalists in the Bay Area, including us, I guess, it's a long-term game, right? You'll make multiple shots on the goal with the founder, and you're gonna make multiple opportunities. There are gonna be multiple opportunities to make money. So it's a bit different, mentality.
All right, so back to the fundraising part. We talked about location, that being one of the components. With access to cloud, access to talent, democratization of technology, it feels like it's easier in some ways to get companies up and running. From your guys' vantage point, do you guys expect startups to be further along now as a result of this democratization when they come in and raise money, or have the standards changed at all? And if so, what does that look like in the next 3 to 5 years as well?
I think it has changed, and the reason is that a Series A investment used to be a couple folks in a garage and a dog, right? And no product, no revenue, certainly not much team. Now, when I meet a Series A company, they've raised sometimes $10 million in seed funding, right? And they've already got initial customers. So I almost joke that the Series A, Series B, Series C, we should replace that with just the number of millions of dollars that you've raised, just to normalize everything, But because now there's a pre-seed, right, where you can raise a few $100K or less than $1 million. Then there's a seed round. Then there's a mango seed round, they call it, right? then there's a seed extension, right? And then the A. So there's a whole, and actually, I think it's actually a good thing because the Series A was almost thinking like a step function, right? We had to go out and get $15 million to get started. Now, just like the cloud, it's sort of elastic and it's like a utility where you can almost raise on a more, linear curve. So I think it's a good thing, but it's certainly changed.
Do you guys see that as well?
Yeah, so Rama typically invests at A, right? So we invest early on, like ideally we invest and Rama invests in our company, and that would be great. So when we look at the pre-seed very, very early on, what I see that behavior, that ability to spin up a product and application quickly by using either cloud resources or a bunch of open source resources out there. We can put together a security company by utilizing a bunch of open source and build on top. What it does is you get some design partners or customers, early customers, they're not paying sometimes they're paying in the first pitch. It's like, hey, we talked to these people, we showed some very vague demo, and they love it, and if you build it, they'll pay, which is a very vague show of interest. But as an investor, early on, I don't know the market as well as the customers themselves, so having the customer's voice is so important. And so that's why I got the 5 minute. So that's I think that's what it helped with. Like, you can really spin up something quickly and get early customer feedback, which is very helpful on the early stage investment.
How about the folks who raise their hand and want to get into VC? What do you want to know? Is anyone brave enough to ask a question about?
I'd like to ask how someone who doesn't come from a strictly technical background and add value to the
I think your question was someone who doesn't come from a technical background?
like not a VC.
Yeah, and I think we have a strangely similar career going from EE to engineers and product managers and then VCs, but it doesn't always have to be that way, right? I think some folks go through investment banking, some folks go to consulting, get a little bit of experience. Some folks join as an associate at our firm or analyst, almost right out of school. There's many paths, but I think the thing is that I wish someone told me years ago was to think like an investor, right? Think about whether it's like your mini stock portfolio, or if you don't have any money, think about a thesis, right? Around if I started tomorrow, what would I be investing in? It doesn't have to be something crazy like Web 3.0 or 4.0, whatever that is, or blockchain. It could be, security. It could be next generation consumer apps, or that you have an opinion on, and have an opinion and a thesis. I think that's what I wish as an engineer. I was always sort of like focused on the facts, and I wish someone told me to this is all about hypothesis and thesis, and adding your value in terms of if you ask for a meeting, with someone at a VC firm, go in there with a thesis. Could be a couple slides, could be verbal, but think and force yourself to figure out if you like this or not, because it might not be for you, but it's a good thought exercise.
I mean, one of the best VCs is Mike Morris, was a journalist. I think he's still a journalist. Or LinkedIn, Reid Hoffman, I forgot his background, it's total different background. So I think, as Rama said, it's total kind of way of thinking about how we're going to add value. It's more kind of understanding, building valuable, scalable businesses doesn't need to be only technology piece. There are a bunch of pillars of the business. There's not technology, right? There's hiring piece, there's positioning and go-to-market. These are sometimes not the strongest sides of the technical entrepreneur, so you can always complement them, support them, advise them. But my general advice to whoever wants to come into venture, which was given to me when I was trying to get it, is go start a company, go join a company. And as I think stealing from a master, I didn't believe that everyone has a company in them. If you really believe it, you'll be able to build it, and you are in one of the best environments to be able to build it. All of you sitting right next to you can be a co-founder, see each other. So couldn't be a better environment to do it.
Awesome. All right, I know we got the 5 minutes, so hopefully we have 30 seconds left. What is your tweet-sized answer for one piece of advice for people going in as entrepreneurs and one piece going in to become a VC?
Well, I guess for the entrepreneurs, have faith in yourself. I love what Esther said about trusting yourself. That was very powerful. But I also think don't be afraid to fail. Let me exceed the tweet limit here. But also, the other thing I want to reflect on the Bay Area is that there's so much willingness to help around here that there just isn't in other parts of this country and around the world. And it's people ask for nothing in return. It's amazing. To reach out to us, I'd be happy to review a business plan or give you advice. And I think there's this pay it forward mentality in Silicon Valley, and so take advantage of it.
That was for you.
Okay. Right. So he did the tweet storm on the on the venture side. My number one tweet for that is just go start a company, join a company before getting into venture. Venture is great in terms of getting a breadth of experience or breadth of exposures, but you will not have enough depth in any of those areas. It's kind of like there's this famous saying: it's breadth versus depth, and without going through this journey yourself, it's hard to add value to others afterwards what the founder is going through. And it is also perfect time really to start great companies in terms of where you are in your life. Early on, the low opportunity cost, great people around you, similar minded thinking. You don't need to be technologists to start it, but you can always partner with a technologist to start one. So it's a perfect time to go start companies. That would be my advice.
Awesome. Well, thank you both. Rama and Baris are both at 1-800-VC, so call them anytime. But beyond that, I'm sure they're open to Twitter, LinkedIn, wherever you guys want to connect, and volunteering them to help any budding entrepreneurs or VCs out. And thank you. With that, appreciate it.
Thank you.
Thank you.